Hey everyone! Welcome back to the channel. Today, we're diving into one of the hottest topics in the investing world, stocks versus real estate. It's the clash of the titans, the battle royale of wealth-building strategies. Now, before we jump in, let me know in the comments which side you're on. Are you team stocks or team real estate? Or maybe you're playing for both teams? This is the Finance Virtuoso channel, where we talk about all things finance. If you're new here, be sure to subscribe and hit the notification bell so you don't miss out on any future money tips and tricks. Alright, let's kick things off by breaking down what we're actually talking about when we say, investing in stocks versus investing in real estate. When you invest in stocks, you're essentially buying a tiny piece of a company. It's like saying, hey, I believe in what you're doing, and I want a slice of that pie. You gain partial ownership of the business, and as it thrives, your slice of the pie gets bigger. On the flip side, real estate investing means you're putting your money into physical property. This could be anything from a cozy little house to a massive apartment complex or even a piece of land that's just waiting for its glow-up moment. Now, here's where things get interesting. Both of these investment types can make you money, but they do it in very different ways. Let's break it down. Making money in the stock market. 1. Buy low, sell high. This is the classic strategy. You buy stocks when they're cheap and sell them when they're worth more. Sounds simple, right? Well, if it were that easy, we'd all be sipping piña coladas on our private islands by now. 2. Dividends. Some stocks pay out regular dividends, which is basically the company sharing its profits with you. You're basically getting a thank you card from the company, but instead of a heartfelt message, you get cold, hard cash. 3. Options trading. This is where things get a bit spicy. You've got puts and calls, which are basically bets on whether a stock will go up or down. You're playing poker with the market, and let me tell you, the house doesn't always win. Making money in real estate. 1. Appreciation. This is the buy low, sell high of the real estate world. You buy a property, wait for it to increase in value, then sell it for a profit. You're buying an ugly duckling and waiting for it to turn into a beautiful swan. 2. Rental income. Instead of selling, you can rent out your property. This gives you a steady stream of income, kind of like dividends from stocks, but with more maintenance issues and late-night phone calls about clogged toilets. 3. Flipping. This is for the impatient folks who don't want to wait for natural appreciation. You purchase a property in need of repair, improve it, and then sell it for a profit. It's like Extreme Makeover, Home Edition, but with your money on the line. Now, let's talk about the pros and cons of each investment type. Pros of stock market investing. 1. Liquidity. You can buy and sell stocks faster than you can say, bull market. Need cash quick? Sell some stocks. It's like having a piggy bank that, hopefully, grows over time. 2. Diversification. With stocks, you can spread your money across different companies and industries. You're not putting all your eggs in one basket, but instead putting them in many baskets, some of which might turn into golden eggs. 3. Low entry barrier. You can start investing in stocks with relatively little money. Some platforms even let you buy fractional shares. You are able to buy a slice of pizza instead of the whole pie. Cons of stock market investing. 1. Volatility. The stock market can be as unpredictable as a cat on catnip. One day you're up, the next day you're down. It's not for the faint of heart. 2. Lack of control. Unless you're a major shareholder, you don't have much say in how the company is run. You're just along for the ride, hoping the captain knows what they're doing. 3. Emotional roller coaster. Watching your stocks go up and down can be stressful. It literally is like being on a roller coaster, except the thrills are replaced with anxiety about your financial future. Pros of real estate investing. 1. Tangible asset. You can see and touch your investment. There's something satisfying about being able to point to a building and say, "Yeah, I own that." 2. Potential for higher returns. Real estate can offer significant returns, especially if you're smart about where and how you invest. 3. Tax benefits. There are various tax advantages to owning real estate, which can help offset some of the costs and boost your overall returns. Cons of real estate investing. 1. High entry barrier. Unlike stocks, you usually need a significant amount of capital to start investing in real estate. It's not exactly spare change you find in your couch cushions. 2. Illiquidity. You can't sell a house as quickly as you can sell a stock. If you need cash fast, you might be out of luck. 3. Management headaches. Whether you're flipping houses or managing rentals, real estate investing often requires a lot of hands-on work. It's not always as passive as some people make it out to be. Now, let's address the million-dollar question: which is riskier? Well, it's not a straightforward answer. They both have their risks, just different ones. The stock market is known for its volatility. And in the worst-case scenario, a company could go bankrupt, leaving your stocks worthless. Real estate, on the other hand, is generally considered more stable. Property values don't usually plummet overnight. But that doesn't mean it's risk-free. Economic downturns, changes in neighborhood dynamics, or unforeseen property issues can all impact your investment. Plus, if you're leveraging your investment with a mortgage, you're taking on additional risk. So, which is more profitable? In the stock market, profits can come quickly if you're lucky, or skilled enough to pick the right stocks. A company's value could skyrocket overnight, turning your investment into a goldmine. But remember, what goes up must come down, and in the stock market, things can come down hard. Real estate, on the other hand, often provides more steady, long-term gains. You're not likely to double your money overnight, but you're also less likely to lose it all in a flash. Plus, with rental properties, you can enjoy a consistent cash flow while your property, hopefully, appreciates in value. Success in either market isn't just about which one is better. It's about which one better suits your personal goals, risk tolerance, and investing style. If you're the type who likes to keep a close eye on your investments and doesn't mind a bit of a roller coaster ride, the stock market might be your jam. You can check your stocks daily, make quick trades, and potentially see fast returns. But if you prefer a more hands-on approach and don't mind playing the long game, real estate could be your ticket. You can actively improve your properties, build relationships with tenants, and slowly but surely build your real estate empire. Of course, who says you have to choose? Many successful investors have a mix of both stocks and real estate in their portfolios. At the end of the day, both the stock market and real estate can be viable paths to building wealth. The key is to educate yourself, understand the risks and rewards, and choose the strategy that aligns with your financial goals and personal preferences. So, what do you think? Are you team stocks, team real estate, or team both? Let me know in the comments below. And remember, whether you're investing in stocks or real estate, the most important thing is to start. As the old Chinese proverb says, the best time to plant a tree was 20 years ago. The second best time is now. The same goes for investing. Thanks for watching, and until next time, happy investing.